Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Hey everyone, checking in on the technology sector, XLK, Apple, and Facebook. And we were looking for further downside today because of the week close down at the lows, and we only got just a tiny bit this morning before the bulls turned around. They really did a good job, and they really impressed me. I did not expect them to be able to turn around so quickly without some further downside. The fortunate thing is, watching it all unfold live, it became very apparent early on that it was going to be up to the technology sector to roll over and see further downside in order for the S&P 500 to see weakness as well. And that is because the S&P 500, although we were seeing lower lows, it was very clear that the bulls were holding on. Even though the financial sector saw a gap down open, it was going to be up to the tech sector to see weakness. And we did get a break of the low of yesterday, which is what I was looking for to get another leg to the downside on the S&P 500. But what stood out was very quickly the bulls bought that dip. And it was within about 5 to 10 minutes after we hit that new low, the lower low, that it became very apparent that the bulls were going to buy this dip in a big way. And that is when the 5-minute time frame lower high pattern at that point started breaking. And that started breaking 52.70 was signal number 1, 52.74 was signal number 2. And then the bulls really ran with it towards the rest of the day. So we flipped to bullish, to looking for some upside in the market once the technology sector broke those two levels and affirmed that they were strong. There were also some clues in hindsight looking back. There was a test of the low of the day at 52.62 earlier in the morning, and we saw a big time volume 5-minute candlestick with lots of bull volume defending that low of the day. So there was some big bull volume showing up previously. We saw the new low of the day, and right after hitting that new low of the day, the bulls showed up and bought that dip in a big way. So being able to pivot and be dead wrong in the sense that I thought we would see further downside than we saw today, and being able to shift that by watching the live trading as it's going on is certainly ideal for a trader to be able to really completely drop all of their previous beliefs and convictions and go based off what they are seeing happening live in front of them. And for me, 52.74 was the level breaking to the upside that proved that we were going to see some upside. So at this point, the bulls are very strong in the tech sector, and we're not going to see a market dump for multiple days if the tech sector is not going to come with it. So the financial sector was still weak. We saw a gap down open there, and we are still holding up here is the bottom line. So support is going to be 52.55, and resistance is going to be 53.02, and then there's resistance levels to be watching from the downside day yesterday. We can look at a 5-minute chart, and every time we set a lower high on that 5-minute chart, that's a resistance level to be watching. Tomorrow's a pretty important day because we're either going to get nice green follow through and prove, okay, that was a one-day event, or we're going to see a bearish day. If we see a red day tomorrow on the S&P 500 or the tech sector, we are going to know that the bears are still in control of the short term, because this isn't going to prove anything at this point of seeing, just a little bit of a bounce before continuation to the downside. So tomorrow, follow through for the bulls is very important. We'll be watching those key resistance levels from yesterday. And in terms of support, we're going to be watching the hourly 20 period. That was another resistance level we were watching all day. That was a level that needed to become support for the bulls to prove they had strength. We rejected from that 20 period hourly resistance 4 hours in a row before finally gaining it at the end of the day with some strength to the upside. So the weekly time frame is pretty much going to be a bearish reversal candlestick no matter what. And the close was, even if we close this week at the open of 53.35, it will still be a bearish reversal doji. So it would require a move back towards the all-time high in order to not be a bearish reversal candlestick. So it is a lot more likely than not that we will be heading into next week cautious of a bearish reversal candlestick. Apple, held the low of yesterday. And there were a couple names of individual names that we watch, high beta names, that held their low of yesterday. And that instantly put them in a stronger grouping category than names that broke their low of yesterday. So Apple, 139.73, 139.76. That is now a key support level to be watching of 139.73. Close up at the high of the day. Apple was a lead bull. Tech sector was a lead bull. So a lead individual name in a lead sector certainly has a lot of strength, and we closed up near the high of the day. We're not too far off from the all-time high. So resistance is 141.60 and 142.80, and it's the same story. If we see follow-through, we know the bulls are still in control, but the Apple bulls, it is appearing with the correlation we have to the tech sector, the Apple bulls have nothing to worry about as long as the tech sector is not dumping. It is responding very, very well. We haven't even touched the middle Bollinger Band since the first day in 2017, so that's showing a lot of strength going forward. It too could potentially still be a bearish reversal candlestick, a lot less likely in the sense that if we close even just a little bit higher than here over the next 2 days, that we will not see a bearish reversal candlestick. So the Apple bulls are the lead individual bull in the lead sector in the market currently. Facebook saw a gap down open and held its middle Bollinger Band. So the tech sector names were responding really strong, but still a lot of work to do as well because of how much we did give back on yesterday. So there are plenty of resistance levels to be watching. The recent previous all-time high, 140.34, will be a resistance level, along with the high of today, 139.79. This middle Bollinger Band is now going to be a good guide. This is the first time we've tested it in 2017 since we gained it, and it is a key level to keep holding. 138, it will be in the low 138 into tomorrow. So close strong for the tech sector and these individual names. Facebook is still a bearish reversal candlestick on the weekly time frame. It too is likely to close as a bearish reversal candlestick, either a doji or a spinning top. We'll see how the next 2 trading days goes. But really, I'm going to be watching, since the election, I've been watching the financial sector and the technology sector tick for tick because the S&P 500 is so strongly correlated to them. And today it was all about the technology sector. We could tell in the first 15-20 minutes it was going to require a lot of weakness there and follow through to the downside in order for the S&P 500 to see that downside. And that, of course, did not end up playing out. So that's what we're going to be watching again tomorrow. If the tech sector continues on this bounce strong, we'll be looking for the market to hold up and for it to continue strong as well. But if we see a red day tomorrow, we are going to know that this bounce was very short-lived and the bears do still have momentum in the short term. So I appreciate you watching. We'll check back in tomorrow and we'll see you then.